Hello there, this is James, and you're watching Tixee Live. And what an exhausted person I am after the last watch along, which happened just over an hour ago. Yes, today's little program, I'm going to discuss about what happened an hour ago and what this potentially means to the market. Before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get to it. So today, I called today CPI Wednesday, and there was a big build up to the watch along, like the CPI previously we did for the US. I did build it up quite heavily. CPI data. That's absolutely right, my friend. Absolutely right, and we'll talk about that. Good to see you, by the way. Good to see you. And I replied to your comment the other day about gold, about other news. I thought that was brilliant. I loved it. It really made me laugh. Anyway, as I was saying, the result was a absolute shocker. Absolute shocker, because US CPI year on year was announced at 9.1% versus 8.8% expected. That is a new decade high. US core CPI year on year was announced at 5.9% versus 5.7% expected. In fact, all the CPIs, all four, were higher than expected. So even month on month was 1.3 versus 1.1 expected. And US core month on month was 0.7 versus 0.6 expected. So a lot higher. But what's scary is if you look at those numbers, and look at the numbers previously. Previously, CPI year on year last month was 8.6. Month on month was 1%. Core CPI year on year is 0.6%. Core CPI year on year 6%. So we're seeing, a steady growth in that, which is worrying because we've already got high interest rates. We've already seen energy prices and commodity prices come under pressure. Yes, there's going to be a lot more pressure for them to come under now because you're going to get real fear, but still, we're not seeing the impact. Of course, we're not supposed to see immediate impact, but the month-on-month number is worrying. We should at least be seeing some sort of change in the month-on-month on both core and normal CPI, but we're not. We're seeing an increase. On other news, though, another thing about this announcement, which is quite nice. They say about the US and UK having some sort of special relationship. I guess in some ways we do, because we're both part of the 9.1% club. UK's inflation is at 9.1%, don't forget. And now so is the US at 9.1%. Now, so we're all like part of the special club now. So obviously that special relationship is intact. So now with this announcement, with this shocking data, I did in the watch along. Sorry, my throat's really thirsty after all that yelling during the watch along. What was I going to say? During the watch along, I mentioned that 3 scenarios. Okay, I went to scenario 1, comes in expected, potential dollar strength, and potentially the market getting scared. I did scenario 2, lower than expected, potentially weaker dollar, market hope. And I did third scenario, which is higher than expected, stronger dollar, pure market fear, and a 75 basic point priced in, and maybe 100. And this is the question now, not the wrong one. This is the question now. Could we potentially see, don't forget this rate decision is now on the 27th of July. Could we see a 100 basic point rate hike on the 27th of July by the Fed? Because they did expect 8.8. If it was 8.8, I think the market had baked in or priced in 75 basic point at the end of the month. Now it's 9.1. Could we potentially see 100 basic point rate hike? So that's the real question the market is now asking. And again, this is where we're going to see real fear again, because too aggressive, the general consensus, the market won't be able to handle this. The market and the economy won't be able to handle this. The job market, okay, is strong. We had a strong number last Friday. We did. But But in the long term, the job market ain't going to handle this because the pricing and people buying stuff isn't going to happen. So this is the thing. This is the overall question. There was another argument, though. I actually sorry, on the back of this announcement, can I just add, Bank of America has now announced they now see a recession very likely in the US this year. So this is how this announcement's been taken by the market and by obviously a number of big investment banks. I did hear another question, though, somebody else make another statement, and they said they reckon this was going to be the last real bad number. That now we will start seeing inflation coming down because energies are coming down in price and things of this nature. So we are going to see this is going to be the last bad one. But here's my point. Even if we do see a slight decline in inflation in the US because of the aggressive rate hikes, it's still only going to sort of drop to maybe 7%, 6%, 8%. It's not going to be dramatic. Okay. And don't forget, their target is 2%. 2%. We're at 9.1%. Their target is at 2%. And to get it down to 2%, they're going to still have to maintain being aggressive. So even if we get a slightly lower number next time, this is not going to be the end of the heat wave. The heat wave is not going to end till we get to 2%. In my opinion, we are still going to potentially see higher CPI numbers in the future. So potentially we could still see that. So I don't think this is the end of the heat wave in the long shot. The UK, they said they're expecting to hit double figures at some point as well. So the US and the UK now are part of the same club who says the US ain't going to see the same. So yeah, anyway, market reaction. And we saw it live. It was really exciting. Sorry, still trying to catch my breath. Market and reaction. Basically, US dollar jumps and euro got dumped. So yes, briefly, euro did go under parity. It has, and we look at it at the moment. I'll bring my charts up in a minute. It did briefly manage to catch its breath a little bit and bounce back up a bit. But I say it is testing parity now. But like I say, it went under parity yesterday slightly. It gave it a like kiss. This time it gave it more of a French kiss. It has bounced back from this since. But like I say, anyway, let's look at it. Let's bring it up. Enough of me talking. Right, so here's where the euro is. On that announcement, on the CPI result coming in, as you can see on this candle, it collapsed. It collapsed, and it did give the parity, did drop over parity properly this time, and gave it a proper French kiss. It's since bounced back, and it's currently trading now at 1.0028. 1.0028. Again, I think, like I discussed yesterday, when we did a lot of coverage on the euro parity story, I do expect it to sort of like, maybe have the UK barrier option buyers holding it up. And obviously we can definitely see some dip buyers. We can see this through the other pairs, but obviously we are going to see now maybe potentially scenario 3, which is more dollar strength. So yeah, parity is still going to get tested again. And I think we've got some major events later next week, which I'll talk about in a bit as well, which I think we will put even more pressure on the single currency. And we may definitely break down past parity again. But this time stay under parity for a while. The cable, sorry, excuse me. Sorry, I do apologize. I did that right in the microphone. My apologies. Again, it did come under a huge amount of pressure on the back of that. We are seeing some dip buyers now, again, which is to be expected. It is to be expected after the big drop. Currently trading at 1.18775. Dollar yen, okay, it did skyrocket again above 137. Around the 137 level, currently trading still above 137, currently trading at 137.46. Gold, yes, I'm going to talk about gold. Gold came under pressure. It's currently managed to get a bit of buyback. Actually fell below 1,710 on that announcement, testing this key level I've been watching for a while, which was acting as a support, 1,727.02. That can now potentially be an area of interest for a resistance. So we're watching that if it bounces back. I think, in the future, if this story develops, we may see more pressure on gold. I don't think with all this inflation stuff and obviously high interest rates, gold has lost its shine. The dollar is taking its crown as a safe haven. However, I think in the future, when we start seeing more recession fear, gold might start becoming attractive or more attractive again to the market. So again, I think this is a story worth keeping an eye on. What else? Bitcoin. Let's have a look at Bitcoin. Bitcoin crashed again as well as under the announcement. Currently trading on, it actually hit around about 18,829. Again, a bit of dip buying going in right now, as we can see. Currently trading at 19,260. But one of the biggest moves we saw was the S&P 500 on the back of that. Again, it crashed all the way down to around about just above 3,745 points. Again, we're seeing a bit of dip buying. But like I said, I think as the market and the day progresses and this week progresses, we are going to see more fear for the stock market. And then NASDAQ as well, that crashed. Though we're seeing some dip buying now, currently trading at 11,644 points. But today it did crash all the way down just above 11,435 on that announcement. So in general, what a day. What are they? Let's have a look at the energies, though, because this is the big real story. We need energies to really drop till the pressure or the hope that we could avoid recession in that. In fact, that inflation can be handled. Currently trading at $94.67. Did come under pressure on that announcement. We are seeing a little bit of dip buying there, though. So, yeah, a little bit of dip buying. Currently trading at $94.64. Yeah, so there we go. What a day. What a day indeed for that announcement. I mean, that was a shocker, I think. I don't think we're out of the woods. I don't think this is the last of the heat wave. And even if we do get a slightly lower number next time, still not going to change how the Fed's going to act or what the Fed's going to do in the future with interest rate hikes. There is general fear now that, they are going to be extra aggressive to get down inflation as soon as they possibly can. I think they probably might have been, even with the shocking headline of 9.1, if core month on month hadn't increased as well, then I think maybe they might be a little bit easy on us come the 27th of July. But now with that core still increasing as well month on month, I can't see it holding back. But definitely there is definitely a minimum, I think. The market is definitely pricing in 75, but I would not be surprised if they'd be extra aggressive and do 100 basis points, trying to get interest rates up to 4%. So, there we go. There we go. What a day. What a proper market move as well. Very exciting. A lot of fear now gripping the market. Let's see, what develops. Anyway, what else is happening? Today we've got Canadian interest rate decision, which is happening, I think, in about 6 minutes' time, actually. I think expectation is to increase to 2.25%. And then tomorrow we have retail sales, US, which would be interesting to see, especially with these levels of inflation, see how dramatically low that level is. And, of course, US Michigan consumer settlement, which is on Friday. So we have plenty of events that are coming up. But next week, I think, especially for Euro traders, it's going to be a big week. I'm very excited about, obviously, we have the ECB interest rate decision. Let's see if they, are aggressive and raise it by 0.25 basic points. Or that it surprises and and are aggressive and raise it by 0.50 basic points. But I think it'd be 0.25. But I think that's a key event for Euro traders, especially as we're hovering around parity at the moment. But I think the big big story next week is to see if the Nord Stream 1 pipeline is turned back on. I think that's going to be more important than the ECB. So again, that's a different story, which I'll go into more detail as we build up close to that. As the market stands, the FTSE is currently trading at negative 0.50. Sorry, FTSE negative 0.43%. DAX currently negative 1.75%. Eurostoxx 50 currently negative 0.90%. So there we go. Let's see how the US session spans out. Curry, like I say, we're seeing a bit of dip buyers. I don't think the dip buyers are going to be able to stay in much longer, though. But who knows? See if they can give it a bit more of a boost and buy on the dips to keep things up over those key levels we looked at. Anyway, don't forget you can ask me questions anytime you want. Like I said, I'm exhausted from the watch along, but I'm so glad we did the US CPI again today, because I just knew, well, I didn't know for certain, but I had a really good feeling that it was going to be a big market mover, and it turned out that it was not a disappointment. So yeah, don't forget, you can ask me questions or say hi, like my friend did just a minute ago. You know, and like I always say, if you think of a question later down the line, just add it to the comments, either behind Facebook or on YouTube. I will see them and I will reply. Or even if you make a say hello on the comments, I will reply to them. Even if it's not a question, like my friend did it the other day. He made a joke about me always talking about gold, which I thought was really hilarious, but also very, very true. Okay, if there is no further questions, not to worry. Like I always say, I'll be back online again tomorrow at 8 a.m. UTC. Let's see the aftermath of the US session on the back of this data and how the rest of the week pans out. Let's also see the Canadian interest rate decision, see how that's affected the loonie, especially with the housing crisis in Canada beginning to gain momentum. So that'd be interesting to see. And overall, let's have a look how the European session starts tomorrow. So don't forget, 8 a.m. UTC tomorrow, plus again tomorrow at 1 p.m. or around the 1 p.m. UTC. I will be back online again to discuss the US session and what has happened so far in the market. And let's have a look at the US retail sales as well, see how that comes out. But anyway, as I always say, if you're watching me on Facebook, sorry, throat really dry. As I always say, if you're watching me on Facebook and you quite like this little program, by all means, give us a follow. If you're watching me on YouTube and you've liked this program, found it interesting, subscribe, by all means, if you want to. Hit the notification button so you know next time I've gone live. If you enjoyed this little video, give me one of these. It's nice to know that you like what I do. But anyway, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.